Okay, so in the last video, if you haven't seen, make sure you go watch it. In that video, we talked about the basics of price action. So the way I teach, I don't try to put too much information right away. I want to make sure you understand the basics, and we take step and step until you fully understand what's going on. And today we will talk about um, looking at momentum and looking at the context of what's going on in the markets so that way you can make a better decision. Okay, so we're still at the candlesticks. One thing I want you guys to see is, you know, your goal should be to be a value trader. Um, you your goal is that you want to buy cheap, um, and you know you want to sell at resistance. So basically, you want to buy at support, you want to sell at resistance, or you want to sell at resistance. Buy at resistance and then sell at support. So for that, we need to understand support and resistance, which we did cover in the last video. Is that if you're a day trader, you want to be looking at the hourly, and you're looking for. Let me remove this. You're looking for the areas where the buyers and sellers are. And we do that based on, like we said, the last candle where we saw a good price action. Okay, so let's look at this chart real quick. And we knew this was the last time buyers stepped in and this area hadn't been tested. And we finally came back and tested it. And after that, we had a small bounce. And we talked about it in the last video. If you haven't seen, go back and check it. And after that, we broke. Okay, so once your support has broken, then if you're a value trader and you know this is your resistance, this was your support, and now this is going to become your resistance, price needs to stay below. So what do we watch? We watch the 10-minute and the hourly to make sure the price stays below. Price has to go up a little bit, came down, and it's holding. You take your starter position here. You never want to go all in. Take your starter position and you go down. Okay. Now, let's just say we go back to the hourly, and let's just say this was your level, and let's just say you drew another level here. Okay. And based on this price action, we can see the last level was this area where buyers stepped in. Okay. So we're just drawing a basic level so we can see that buyers stepped in here. Okay. Um, and you can draw this area as well. You can see some buyers step in. All right. So now you have all these areas. So, and you're going to be like, okay, I got in a put position here. Uh, when do I sell? When do I get out? What areas are my targets? Is it going to be easier to break this level? Is it going to be harder to break this level? So first thing we have to see is that this was an area that hadn't been tested since last time. It got tested and we broke through it. Okay. When you're looking at the candles to see how strong an area was, you want to see a continuation, right? So since last time bulls stepped in here, you saw a continuation. There were some bulls here, but you can see, it tried to hold the level, but there was a lot of buying and selling going on over here. So this area is not that strong compared to this area where you saw a big push. Okay, let's go back and let me make the screen a little bit bigger so you can see much better. Um, this area, same thing. You don't it's a weak bull area. Okay, excuse me. And then we broke through this, still in range, and then we finally broke through. This is much stronger area. Okay. Then look at this area, way stronger. So one thing you have to understand is that these areas, weaker price reaction, and these areas are your areas that are your partials areas where you're going to take some profits, okay? But your main goal is the bigger area where you saw a bigger reaction, because the point of algorithms, the point of the systems is to take orders where their majority of the orders are sitting, okay? And it makes sense for orders to sit here because you have a bigger reaction here. So if you are in an area and you see that the price has been trading upwards, and then it finally came down and broke the support, and now it's breaking through it with volume, okay, then these smaller areas will be easy to break, and that's when you can have your trend days, okay? And that's what you got. You got a nice rejection of price to come down to test the area where last time big buyer stepped in. Because if you can see, big buyer stepped in, price move a little slower, and then you had a big move. Okay, trend day went up, came back, went up, came back. Tested this area 2 times, came down. This area becomes weaker. We're able to break through it, and then they decided that they want to go back down. And in the last video, we talked about the market is always looking for a fair value price. It wants to find out which price is too expensive, what is too cheap. So it determined that this is too expensive, we want to come down. And they said this is too cheap. And then eventually it decided, based on fundamentals or whatever is going on, that is um, this area is too expensive and you want to go down. Okay, so price went down and area is getting tested. Okay, so since we already know that what's going on with price and you have your levels, and like I said, you can always change these levels to different colors, okay? And always mark like your main areas. Um, and you got in the trade, okay? Let's just say you, you missed the trade right here, okay? You got in, let's just say you took a starter here, or let's just say you took a starter here, you came down, you sold, you had a really good trade, okay? Now, if you look at the price came down, first touch, and I mentioned that in the last video as well, that the first touch, the bounce is very, very important. You most likely will get a bounce, and we, held this and we got a bounce, okay? Because the first time touching this area since um, we've been above here, okay? So first touch of this area since, you know, the July 24th. Okay, so you can expect some kind of bounce because based on the candle on the hourly, we could see they were a good candle and we should see some kind of reaction, and we did. Okay, now price is going to go back up and it's going to test these areas. Okay, because if you see here, when this price broke through here, it wanted to retest this area to make sure that are we really want to go down, or are we going to hold this area because this was a key area, right? Are we going to hold this key area, or are we really going to go down? And they didn't want to hold this area, so the price came down. If it held this area, then we could have went up. So some people will get in a trade right here and they will start panicking out because they will start saying, buyer step in. You're always going to expect buyer step in because they want to test an area. This is a crucial area that was part of a range. And once we break out the range and we broke out the support, you're going to see a reaction. Okay. So some people will get out of here and they'll just panic out and sell. But you don't, you got to know the context of what's going on in the market. So look back and see that, hey, we are coming down to this area. We have tested this area multiple times. Okay. We tested once, we had a bounce, tested again, we had this bounce. This area has gotten weaker. So price rejecting this area, there is higher chances of price rejecting this area to continue the trend. Okay. So you need to, that's why you need to watch a higher time frame, because you want to see how strong this area is. And based on the price action and the context, you know that this area is going to hold. Okay. So a lot of people make mistakes because they are not patient enough, which is why we want to watch the 10-minute or the hourly, hourly for the, drawing our lines in 10-minute to trade because you want to always want to see the bigger picture. And what happens? Price came down, easily rejected through this with volume, and it came down and it's going to retest another area, which was this weaker area it saw. And that's like the 555 area, which is a psychological area. Okay, so price is going to go back up, test the psychological area, and what did you get? Another push down. Okay, this time price came down here, try to do a bounce, but nope, it failed. And then look what it did again. It tested it again. So the point is that if you look at 10-minute, you are seeing that these areas are going to get tested, and you're seeing that the price is closing below. Okay, so price still wants to continue. So the context is still downwards. So even let's just say you bought, like let's say you bought puts here. Okay, do not panic and sell unless you start seeing candles closing above. Okay, you want to take your starter, you don't want to go all in, and wait till see what happens when price retests this area. If the context is downwards, then most likely the momentum will follow and you will continue downwards. Okay, same thing here. The next day, we had found this area. Okay, so let's just go on hourly and see what's going on. Okay, on the hourly, we have now this area where buyer stepped in. Okay, it's not that strong of an area because why? You see a candle, then they come in, they held the candle, it goes up. All right, and you see there is a lot going on here. Okay, so this area you can see a reaction, but it's not going to be a reaction that you're going to get when price comes back down to this area, right? Or maybe when price comes back down to this area. All right, okay, so I wasn't even looking and I drew this. Okay, so you saw the price, then the next day, I mean, Thursday came up and came down. And the next day, we are testing this area and we were able to break it on the hourly. Okay, so now you have the levels. So we go on the 10-minute. Okay, and then you come Friday and you're watching this trade. And since you already had drawn the levels and you know what it is, you can see on the hourly that this area got tested multiple times. Okay, and now let me just go back and draw them. So this area is our main area, right? And then this area is also our main area. Okay, this was our main area. So this, we know this is our weaker area based on how the price moved, right? So you want to watch this compared to this and compared to this. Okay, um, so we know this is our weaker area. So when price broke through this area, this zone, okay, we have this move right here, but then we start seeing candle closing. You want to take your starters here, okay, and you want to take profits along the way, scalp it along the way. So let's just say you took your starter here, you added more, you came down here, you, let's just say you sold. Let's just say you didn't sell. Okay, let's just say you didn't sell because, you were like, oh, it's really going to touch my area. If it's you really want your area to come, which what we talked about is when an area breaks and there's a major area where there's a lot of buyers, that area is going to get tested. Even if it went up, okay, and you saw that the candles were closing, you have nothing to fear because price is going to follow because of the context. And a lot of people will panic when they see a candle. Okay, you see I'm using white and black candles because the way the human brain is, psychologically, when you see a green light, you go. When you see a red light, you stop. The brain is wired like that, okay? Psychologically, okay? The psychologically, when you see a green or red candle, you're gonna psychologically be like, oh my God, I need to get out of this trade. But you don't think about the context. You subconsciously make that mistake. Okay. And just that's how we're wired, as humans, like you grow up, um, as a kid, your parents tell you you can't go down to the road, you can't ride a bicycle down the road because a car is going to hit you. They say that to you, that a car is going to hit you, not like it might hit you, it's going to. So you have that fear in your head. Okay, so growing up, you have that fear. So when you're trading and you see certain, you are trading, you're scalping and you're a new trader, you're going to get stopped out a lot because you're trading smaller time frames. And in smaller time frames, it's too much going on. And you're probably going to get enter here, and then you're going to see this, or you're going to, or you enter, let's just say here, and then you see this, and like, oh my God, and you just get out. Okay. But on the 10-minute time frame, you have a lot more patience and you have to wait until the price, um, the candle closes. Okay, so as long as the candle is closing and the context is still downwards and we broke through an area, okay, that was our key area, okay, and price is staying below it and it's staying below, um, these lows right here, then you are waiting for your level to respect. So you have already done your homework. Okay, you already spent like 30 minutes or an hour looking at all these charts and drawing all these lines and everything. But then when the day comes and you trade, you just panic looking at this candle. No, you can't do that. Okay? You cannot expect the trade to fully go down and touch this level. Stock moves in waves. Price is going to move in waves. So you can expect price to go down, go up, go down, go up, go down, and then go down, and then go up, and do whatever it wants to do. Okay, but you need to follow your game plan. So the game plan was, if we look at the 1 hour, we were able to tell already that this area is weak and this area is stronger. We can tell which area is weak, which area is stronger, based on, how the candles react previously, and you should have held it. Okay, or maybe you could have added a little more. Once you saw this coming down, you're like, okay, it's gonna happen. And then, what did price do? Price, like I said, it's gonna come close to the area or near that area. Okay, all right. So price is always going to test that area. It has to. Okay, it has to decide. Okay, if this is strong, this is cheap. Market is always looking for a fair value price. It needs to determine what is fair value, what is not. Like I said, fundamentals and things change. So the context is really important. Okay, so let's just say if you were scalping, you got some hair puts, you know, came down, you made like a 70%, 80%. Okay, you can scalp that way. Okay, it comes down, test this area, you can see a rejection, what's happening, you can scalp that way. You're trading futures, you can scalp many ways. But if you are a new trader, um, or if you even are experienced trader, your risk and reward should be good. Your risk should be to like risk $100 to make $300. Um, and that's like, let's just say you did that today. You risk $100 to make $300, and tomorrow you risked $100 and you were only able to make $100, and then the next day you lost some money, but in the end of the week you want to be up, you know a decent amount. And the way you do that is you trade bigger time frame and you risk $100, and your goal should be to make 300. And I usually trade options. um, so um, you need a lot more patience in options. Okay, a lot of people, try to scalp and do that. It works. That's fine. Some days you can scalp in between, but if you're trading level to level and you're waiting for the trade to come to you, you're going to get those big trades. Okay, and all my trades that I made money in are, it's all because of patience and waiting for the level to hit, because the level is going to get hit. Okay, so, um, like I said, context is really, really important. You just look at the price actions and you can see, okay? Uh, and for momentum, you know, uh, how else can you see momentum? So, like if something like, you can use moving averages, you can use, all right, let's see this. Okay, how do I do this? Okay, Let's do 5, 9, 14, 21, 50, 200. Okay, you can just do this. All right, I'm just gonna do this. Or actually, let's see. There's too much going on. Hmm. Okay, 5, 9, 20. Okay, so momentum, you can see um, 5-9 EMAs are good for momentums. Okay, but thing is, you cannot like just follow the EMAs on this when it's like a range like this. You want to follow the EMAs if once your level breaks out. Okay, once your level breaks out, then you can follow the EMAs if it helps you. If you want to use like EMA, you can use these EMAs. 5, 9, 14, 21, or 5, 9, 20, 21, 50, and 200. Okay, so 50 and 200 are basically support and resistance. Okay, 5, 9 are momentum. 20 EMA, you can use it as like a crossover. Like if it crosses over this, it's gonna go up, or if it doesn't cross over, it's going to, stay. And 50 is also like same thing. It's like a support and resistance. So as you see, price went up to the 50, rejected it, and came back down. So EMAs are good. When they are trend days. On range days, you don't want to follow them. You are going to make a lot of mistakes. So either you can follow them, or either you don't, or you can just use them for education only. You can just go back and review your trades, um, because they do make your chart um, a lot. There's a lot going on, but if you know you your experience if you're experienced trader, then it doesn't really make a difference, because that's the only thing that's on your chart. Okay, and you can remove some EMAs and just put on the ones that work for you. Okay, so basically 5, 9 are momentums, and you can see how price is going up these EMAs and still closing, right? Which comes back to the same thing, that it's based off of price. So it's based off of candlesticks. So as long as you're watching the candlesticks, you can see, what's going on. Because over here, it would have helped knowing that, okay, momentum is still holding, and you can see that the trend is still holding, and it goes up, and you can see it's rejecting the 20 as well, and you know, it's rejecting the, okay, I don't know why I did that, rejecting the 50 as well, and the context, is still there. So you can use that as a context to know what's going on. All right. Um, so yeah, so that's very, very important.